welcome back. Joining us now is David Morgan of the Morgan Report. David is our precious metals expert, and as you know, our markets here in the United States are closed in observance of President's Day, but they are trading in the rest of the world, and the rally in gold and silver continues. David, what do you think?
Well, it's nice to see some follow-through in these smaller markets, and I think it's a good thing. I'd rather see it up than down, but it doesn't really carry a lot of meaning until we see, what happens in the LBMA and the New York markets tomorrow. But they will start from a higher place, and I would like to see more follow-through. I mean, as you know, Alan, we talked about what was a breakout last week on your show, and it said $21. And we just blasted through $21, and we're approaching 22 as we're doing your show this week. So silver has had a huge move, a 5% move in one day on last Friday. Gold is over the $1,300 level. I actually think that we haven't got a lot further to go on a very, very short-term basis. But I think over the 21 level and 1,300 in gold, we're definitely on our way to reestablish the bull market, and that's, of course, what I've been saying for quite some time now.
Well, with the market being closed here, I'm having to resort to Kitco, where it looks like still around 1327. So we're actually closer to that 1330 level on the gold market.
We are, and again, this caught a lot of people by surprise. Certainly not us. We expected to see a pretty good 2014. Certainly we're way off from the highs of a couple of years ago. And, gold only had a 12-year-in-a-row run. I mean, gold was higher year over year for 12 consecutive years. In the 13th year, which is 2013, it fell off. And all anyone ever talks about was how bad gold was doing. They don't mention the 12 previous years where it did better and better and better every year. Silver didn't do as well. Silver has a couple years that it has been lower on a year-over-year basis. Nonetheless, again, I think we're on our way. There's more and more interest in these markets. The China buying hasn't slowed down. The Germany problem hasn't gone away. And a lot of people are very hesitant to move into any other asset class now that the stock market is really overvalued. The housing market, kind of neutral. I think longer term that the housing market's actually going to come down somewhat. There's a lot of home sales, but it's been bought primarily by hedge funds and flippers that are buying for cash. The mortgage market's really dried up still. There's not nearly as many mortgages being written on these houses that are being bought because, again, they're being bought on an all-cash basis. Not in every case, of course, but a great deal of them.
David, if we can break through 22, do you think we're going to have a pretty good run on up to 29.30, or how do you expect this silver action to pan out here in the near term?
Well, silver doesn't have a lot of resistance between 21 and 26, what I call the breakdown level. So certainly there's less resistance to the upside than other levels of price. But the 26 level, where it broke down and was forced down by an unbelievable amount of selling, and simultaneously the gold market broke down from roughly the 1550 level. So both those areas, I think, will be defended, meaning that as they get to those levels or close to them, that you'll see them back off. And it'll probably take 2 or 3 tries to go through those levels. But once they establish that, and so silver's above 26, gold's above 1550, that resistance then becomes support again. And those levels were huge support for both gold and silver respectively for a very long time until they broke down. So once it's reestablished as support, then you'll see a rebuilding and you'll take on, the next set of resistance levels, which I don't have the long-term charts in front of me, but certainly it could be 30-ish. That area sort of rings a bell without looking too closely. But I do think it's going to take time, Alan. I think this isn't something that we're going to see, in a matter of months. I think it's going to be something that we're going to see over the course of this year. I think you are definitely going to see both gold and silver above those levels, and you're going to see them move probably, as I said earlier. I mean, I've been pretty consistent about this. You could see silver up into the 30 level or touch it before the end of the year, maybe higher than that. Gold probably up to the $1,700 level before the end of the year, but I'm not looking at that, before the mid part of the year. I'm looking for it like in the fourth quarter of the year. However, that doesn't take into account anything that could blow up, and excuse the nomenclature, but, with the Middle East going on, and just talk about Iran and North Korea and what's going on in the waters of the Middle East, and on and on and on. There's so many things that could cause a rapid flow into the gold market because of these stresses on the geopolitical front globally. And there are tensions that are building and increasing. And because of that, any of those things, my prices on gold and silver are excluding those type of events, but my thinking isn't going to exclude them. So if something like that were to occur, then you might see these prices go up much more rapidly.
David, what do you think's behind the move in the precious metals? I know the paper bugs, as you called them one time, the equity guys, they still look at the precious metals disdainfully. Do you think this all goes back to this sovereign demand to repatriate their gold, Janet Yellen's vow to continue printing money, the fact that we're operating without a debt ceiling, all of the above? What do you think's driven this sudden resurgence in the metals?
Well, I agree with you. I think it's everything that you said, and I'd add on one thing, and that is that most of Wall Street are followers, not leaders. And the best performing asset class right now in the stock market are the gold funds. Isn't that interesting? So for 2014, any of these trend follower, momentum players, software types that look at, all the asset classes, like, for example, if you look at IBD, you'll be looking at different asset classes. You look at, cyclicals, you look at food, you can look at energy, you can look at all these different classifications. So the one that's standing out in 2014 are the gold funds. Isn't that interesting? So the miners have really taken off here. Now, certainly we're at, just over the bottom. In my view, the bottom occurred rather recently, and they're up off the bottom, but they're up off the bottom rather significantly. So this could be another factor that brings more people in there. It's like, maybe it's time, especially people that can think on their own. Money managers, fund managers, even individuals. Say, you know what, the stock market, by any measure historically, is high, gold is low. Gold is the counter asset to the stock market, not gold stocks, but they do track each other fairly well. So you move some of your assets out of the high-priced equities into the low-priced equities. So you go from traditional stock investments, say whatever's in the S&P 500 as an example, into some of these stronger gold funds. So I think that has something to do with it as well.
What do you recommend people that miss the initial move? What do you think they should do?
Well, they haven't missed the real move. I've already said the easy money's been made. And what's the easy money? The easy money is buying gold and silver when nobody wants it, nobody cares about it, no one talks about it. And that was roughly between 2000 and, say, 2004 or 5. And if you've got your position in then and you've held on, you've done really well in real terms, even though you had a down year in gold last year. If you miss that easy money, the big money is where the general public wakes up to this and starts coming in the market, and that's what lies ahead. This will be what took place in the 1980 bull market, or the last bull market that peaked in 1980. You saw in 1979 that silver started the year at $6 an ounce, and a year later it hit $50 intraday. So you had like an 800% increase in 1 year. But before that, it took like 15 years, from 1965 through 1979, to move from $1.29 an ounce to roughly the $6 level. So in real terms, inflation was fairly low in some of those years, not in all those years. You had real gains, and you had rather substantial gains relative to what was going on with the rest of the markets. However, if you were a speculator or you came late to the party, so $6, you're buying silver at an all-time high, really. But you bought in that time frame and held on to the peak. Now, that's the big money. The big money is 8 times on your money in a year. The easy money or the safe money was buying it in the early mid-'60s, holding on to, say, 79, hopefully till 1980. So the big move, I believe, is ahead of us, where you could see silver go from 20 to 100 as an example, or gold go from 1,300 to 5,000, whatever the case may be. I don't want people to get too hung up on what the price levels are. I want them to get the idea that when this market really accelerates, it's going to go up and up and up and up. You're going to see these moves in gold that will be like $50 a day, $100 a day, that type of thing, like a few days in a row. then it'll back and fill and it'll continue on. And it'll be news on the mainstream. They won't, they can't ignore it. They'll have to say something probably derogatory about it, but they'll have to acknowledge the fact that gold is moving up and up and up. So this is what lies ahead. Now, I'm not saying that in 2014. I doubt that will happen in 2014. Probably not the first half of 2015. But somewhere when this debt bomb explodes, this constant printing that no one really wants to acknowledge from the U.S. point of view, but the rest of the world can't ignore. When that takes place, you're going to see a rush into the gold market like you've never seen in all of history.
Silver123.net is a silver saver program designed to be as simple as possible. For as little as $50 per month, you can set up and create an automatic cost average buying program that will get silver or gold sent to your door on a monthly basis. The first step to creating an account is easy. You will supply some basic information. Next, you will add a bank account from which you will schedule your purchases. Scheduling purchases makes saving easy. Silver Saver is customizable and allows you to control the amount and the date of purchase. Once you are signed up, you are then given your affiliate code. Now you can save in precious metals and also market this program. You can use email, web pages, and multiple forms of social media to share the Silver Saver program. Silver Saver will reward you generously with physical silver or gold whenever someone you refer becomes a saver. Silver Saver not only provides you with a share code, but also allows you to place your own banner ad on a website of your own. Silver Saver is one of the best ways to start saving and accumulating gold or silver, especially at these levels. Visit silver123.net and start saving today.